You're listening to The RealWealth Show with Kathy Fettke, the real estate investor's resource.
"52 properties in 52 weeks. Can you imagine? That sounds like a lot of work. Well, our guest today is going to tell us how he did that. I'm Kathy Fettke, and welcome to The RealWealth Show. Omni Casey has been a real estate investor, broker, and coach for nearly 20 years. His real estate career started in Hawaii, where he grew up, and over the last 10 years, he and his family have lived in North Virginia and have been very active in both growing their real estate investment portfolio and growing a top-performing real estate team. And he's here with us on The RealWealth Show to share with us how they acquired 52 properties, well, almost 52 properties in 52 weeks. Omni, welcome to The RealWealth Show.
Kathy, thanks for inviting me. Appreciate it.
Well, how did you get started 20 years ago?
So I'm from Hawaii originally. So I was, born and raised there. I was actually working at a surf shop. I flipped surfboards. So I bought raggedy old surfboards and fixed them up and sold them for a profit, and started to realize there might be other things that I could, raise in value. And real estate obviously was one of those things that I researched. Didn't know anything about real estate. I loved business in general. Was lucky enough to find a mentor over a surfboard at that shop and got into real estate and never looked back for about 20 years. Fixed and flip, mostly buy and hold multifamily now, but did just about everything you can think of within real estate.
You are definitely the first person I met who fixed and flipped surfboards. Actually, the way that Rich and I got started in surfing was we were just taking a walk one day and somebody drove by and their surfboard fell off their car and just like right at our feet. And we thought this must be a sign from God. We, obviously left the surfboard there for a few days, hoping they'd come back and get it. They never did. That became our first surfboard. We ended up getting it fixed, and we found out that's a thing, that there's people who actually can fix damaged boards. So wonderful. Well, I would say that the profits in real estate are probably a bit better.
Just a bit, yes.
Yeah. Okay. So how did you get through 2008? That was a tough time. What were you doing then, and how did 2008 hit you?
Yeah, I think, well, I don't know if I knew any better. I learned good principles, and by that time I was buying and holding for cash flow. And it wasn't really selling, worrying about the resale value at that point. So I was buying in areas that were cash flowing well. And my philosophy by that point is I want to buy something that I never need to sell. As long as it's cash flowing, it has a good margin for me, and I have a good team in place, even if the values start to drop, as long as I can maintain those rentals, I was able to maintain that. So the vast majority of what I was doing at that time was that. I clearly lost a lot of equity in my properties, but did not have to sell. And because of that, came out fairly unscathed.
Oh, wonderful. Okay. And were you mainly buying to hold or flipping? What were you doing back then?
Yeah. Started out, I bought and I fixed and flipped. I learned how to wholesale. This is in Hawaii because I didn't have any money. I was in my early 20s, and my mentor says, all right, you don't have any money. You got to go find a deal, right? Learn how to go find deals. And I learned how to find deals and brought it to him, and he bought them and brought me on as an equity partner because of that, and was able to earn my way into several deals and then start to save up enough. I realized that there's no amount of money that I'll be able to save to be a consistent real estate buy and hold real estate investor in Hawaii. And so while living in Hawaii, learned to invest remotely in various, cash flow markets in the mainland. I currently live in Northern Virginia now, just outside of Washington, D.C., which is where my wife is from. But a lot of what I do is out here on the East Coast now.
I think everyone would like to know how you find a deal in Hawaii. So how did you? Was it sort of driving by and looking for
Yes.
old
So I would say,
houses?
yeah, you're looking for ugly, dilapidated, vacant homes, and there's a lot of great lists out there now. There's a lot of great apps to use. None of that existed 20 years ago. So it was driving through neighborhoods and figuring out, is the grass high? Is there mail, piled up on the front lawn? And is that an indication of it might be vacant? And if so, how do I research and find them in the tax records to see if I could get their information and mail them a letter to their actual residence, or figure out, can I look them up and call them. So I'm jealous of those starting now, because there's so much great technology that you can push a button, get all that information. None of that existed, or at least I didn't know about it back then.
Oh, it's amazing how the world has changed.
Yes.
So what is your favorite way for finding distressed owners?
So now most of what I do is I buy through wholesalers, I buy through real estate agents, and I buy through my network. Your network is by far the most valuable thing you can grow. So letting people know what you do. Over the last few years, I've shifted into my buy and hold is primarily we purchase portfolios, small mom and pop portfolios. Someone that's looking to exit, someone that has 5, 10, 15, 20 properties. Primarily small multifamily properties. And as you know, if you're trying to sell off a portfolio, it often can be difficult, right? Try to selling it off one at a time. It might take a while. If you have a loan across all of your properties, a portfolio loan, sometimes the lenders don't like you selling one at a time. They want you to kind of sell in bulk. And so we offer that solution. We're able to buy the entire portfolio, which means we buy the good, the bad, and the ugly of the portfolio. And we keep the ones that fit what we want to, keep for our rental properties, and like the one or two that don't fit, then we will fix those up and we'll sell those off to different buyers at that point.
Oh, wonderful. Okay, so you had to learn, just like we had to learn, how to invest out of state. What was your first experience with that? How did it go?
I think I took a very, very safe approach. And so I bought something very, very inexpensive out of state. And I, made sure I had an agent. I made sure I had a property manager, and actually connected with an investor in that area first. So I didn't just dive into a market that I didn't know. I did a lot of research before I actually decided to buy. So the property was about $125,000. It was very minimal risk at that point. It wasn't in a huge growth market. It was a slightly growing market, but it was really, the cash flow per the purchase price was enough where even if the rents didn't increase, every single year, or if it was a slow increase, I was already positive cash flow, and I was comfortable with that. So for my first property, I took a very, safe approach. As I start to scale later on and buy in newer markets, then I learned, buying before you have your team set up. That was the risk, because I've bought great investment properties in markets where I didn't have my property manager, I didn't have my agent or support on the ground. And those great properties became bad investments because I didn't have anyone to manage it, or I didn't have anyone great to manage it yet. And so I really focused on making sure I set up my team in an area first. And once I get a great team and a rock star property manager in place, then I'll go all in and I will start to buy multiple properties around that property manager and team, because that's the most important part, right? Find a great area, but even in a great area, you can be buying a terrible investment if you have a terrible team.
Oh, I cannot agree with you more. We bought a brand new, gorgeous lakefront property many, many years ago. And the property manager just wasn't paying attention and obviously didn't have clear rules of engagement. Basically, when they left and moved out, they had painted the entire house purple and like dark purple. And it turns out that's really hard to paint over.
Right. Yeah.
It was very expensive to bring it back to white. So anyway, yes, it can be expensive to have a property manager who's not clear at the outside of what the rules are and is watching over that property.
Absolutely.
Yeah. Okay. Now, as we move into whatever this is, 2022, it's a changing market again. And I love to talk to more experienced investors who've been around the block, just to see how you're preparing for yet another shift in the market.
Yeah, it's interesting because it is so different than it was just, 6 months ago or even a year ago. So the complaint, and I run a local education meetup in my area, and the common theme for the last 2 years was there's no properties, right? There's so much competition, there's no inventory. And so kind of listening to that, and we typically for the last 20 years buy 5, 10, 15 properties a year, my wife and I, and that's just kind of been our thing. And I really said, you know what? I want to, challenge myself and then prove that you can go find, properties. You probably got to do it in a slightly different way. But I set the goal last year, 2021, to buy one property per week. So 52 properties in 52 weeks. We didn't quite get there. We ended up closing on 46 properties, which is way more than we normally do in a normal year. And that was probably, one of the tightest inventory markets out there. And one I wanted to prove to myself and wanted to prove to the people that I coach and train, like, you can go find properties in a tight market. So now we're complete opposite, right? We have properties available. We have properties sitting on the MLS. There's deals on the MLS you can get now. And I would say over the next couple months that will increase. And some of those people that were complaining about no almory or no deals to find, they're still not buying properties, right? And so you're figuring out
There's always an excuse,
there's
right?
always an excuse, right? If you weren't buying then and you're not buying now, are you really going to do this ever, right? So you have to pick one or the other. And so the holdup is obviously the interest rates and worrying about what's going to happen. Anytime the market slows down, I typically put my head down and I try to buy as much as possible. I'm doing the same thing right now. Clearly try to buy smart with right principles, and same philosophies of properties that if I buy it, hopefully I never have to sell this property. I would love to keep this cash flow forever. Now, the long-term debt is not great. And so I'm doing more of seller financing. We're doing more subject to, and we're taking over financing, and we're finding people that just want to get out. They're worried, and we're providing a solution for them to be able to get out of this market because they're nervous about it. We buy it at a deal that makes sense for us, but they're willing to carry it for seller financing for the next 5 to 10 years. That gives me an ability to hold it at a low interest rate, and then obviously looking at potentially paying that off or refinancing down the road when the rates are better.
Can you explain subject to, because this really is a great time to understand what that means?
I would say it's going to be so relevant this year and next year, and I'm not the one to explain that. Obviously, Pace Morby, who you probably know as well, is probably the authority on that, the guru on that, right? So you look him up. He's great in terms of his content, but in terms of subject to, anytime you look at an old HUD sheet or an Alta, there's always been a line on there that says subject to. I bought this property subject to this financing, subject to this mortgage. And for the most part, the vast majority of transactions, we never actually use it. So it's been something that's been available. I buy the property, but I don't assume their mortgage. They keep the mortgage, and they agree to allow me to make payments on their behalf. And so that, there's some complications that happen. There's some risk in terms of people get worried about the due on sale clause and things like that. But the reality is it's a great solution if you understand how to do it. You're able to buy a property and they have a 2.5% interest rate. That's just amazing, right? Why get rid of that interest rate? Let's keep that going. And then they're able to sell it at a price probably higher than they could if they had to sell it to someone that's getting a 7% interest rate. So they actually are getting more money, selling it subject to, than if they sold it to a traditional buyer who's getting their own financing.
Yeah. There's going to be some great opportunity. One of the things that I've noticed, and especially now that I'm a co-host on a Bigger Pockets podcast on the market, is that experienced investors are just stoked. They're just jumping in and looking for all the opportunity. They were doing that last year, and they were doing that the year before, and they were doing that the year before. But they're doing it now.
Yes.
And yet we get sort of angry, mean, troll-like comments of, never listen to a realtor. They'll always say it's time to buy. And I take offense because I'm an investor first, real estate agent second. What are your thoughts on that, on the different ways that people see opportunity or, see real estate?
It is tough. You're right. And I think as you get more and more, into putting out there, like most of my career, I did not put out that I was a real estate investor. I don't know if I was embarrassed or if I was not sure of myself yet. We're very private people. We're not big on social media up until the last year or so. And so I didn't have to deal with it most of my career. I put my head down and we just did our thing. But now that I really want to, coach and share and make sure my friends and family know that there's alternate options out there, I do get those hate messages every once in a while. And I think you got to take it with a grain of salt. People that are commenting and angry, I usually see that as it's some sort of reflection of they're just not happy with something in their life typically, and they need to lash out. So I try not to take it personally.
Yeah, that's very smart. Okay, lessons learned. I love to ask this question from experienced investors because we have so many of them, right? What are the biggest challenges and lessons learned over the years?
Yeah. So mindset more than anything. Every time I, think I've reached my limit, the way I get out of that is I need coaches, right? So I'm a coach, I'm a mentor, but I hire coaches, I hire mentors, and I specifically try to be in great masterminds all the time. So those three things throughout my career has completely changed everything for me in making sure I always had great coaches, great mentors, and be a part of great masterminds. So I would have done that from the beginning, right? I had a mentor, but I never really had a coach in the beginning, never really had masterminds early on. I would have forced myself to be in those three arenas and have those resources because over the last 10 plus years of it, making sure I had coaches, mentors, and masterminds, the growth has been exponential where it was a linear growth up until that point. So surround yourself with the great coaches, mentors, and masterminds. And you can say that's not just real estate investing, that's anything, any sort of business. You can kind of benefit from that.
Yeah, that's great advice. So are you doing any traditional type investing, just getting loans? And if so, what kind? I mean, rates are just all over the place.
Sure. So last year, a lot more traditional investing, more DSCR investor loans, a lot of portfolio purchases. So we do a good job of just buying properties. We started out with one per year, and then 2 per year, 5 per year, and then last year was 46. And we just save up that cash flow, and so we use our cash flow to buy more cash flow. And then over the last couple of years, the values have gone up, so we've cashed out a lot of that. And we use that to buy more properties as well. So I do cash purchases and then refinance out a lot of those. So the BRRRR strategy. So if I'm buying 10 properties in a portfolio, I'll buy it cash often and then refinance out individually so that I can have 30-year debt on them, if at all possible. Now, this year, I'm not looking to refinance into 30-year debt because I don't want to keep a 7% interest rate for 30 years. Right. So there's ARM programs or, some properties I've decided not to cash out and just do a shorter term HELOC until the rates, come back down. So I think it's just evolving your strategy. But this year, I don't think I'm going to use a lot of traditional debt just because I don't want to lock it in at this rate.
Very good. All right. Any final thoughts for our listeners?
Yeah, no, I'm a huge fan of the show, a huge fan of what you guys do on the education wise. So I would say, what I've kind of talked a lot about recently was the concept of are you playing the right game? And so I actually have it on my shirt here. So I think about that all the time, right? So are you playing the right game? So we're always, in real estate, in any sort of business, when I started out on the cash flow, the active income game, and realized that wasn't the most important game, right? And so I'm pretty much everyone that is part of your community probably already understands that the most important game is that passive income to be able to provide that, that freedom, that time freedom that we're all looking for. So whether you're an investor, whether you're an agent, whether you're in some sort of other business, always ask yourself, what game are you playing? And if I can shift from that active income game to the passive income focus, then it's a whole new, game after that. So that's what I love talking about. That's what I love coaching too. And I know that's right in line with what you do as well.
Awesome. Well, it's been just wonderful having you here. Thank you for sharing all your wisdom with us here today on the RealWealth Show.
Thank you, Kathy. Appreciate it.
And thank you for joining us here. Again, you can go to realwealthshow.com and get access to the property teams and investment counselors. I'm Kathy Fettke. Thanks so much for joining me here on the RealWealth Show. We'll see you next time.
The views and opinions expressed in this podcast are provided for informational purposes only and should not be construed as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, go to realwealthshow.com.